What's up, traders? It's Crete here. Welcome back to another trader interview here on the channel and on the podcast. I hope you will like this one. Today I'm sitting down with Rubin. Greg is a senior trader for Global Prime with over 13 years of experience in the market. And he came on the podcast to share more about his trading methodology, what he's doing in the market on a daily basis, as well as all the tips he got from his many years of being in the markets. You'll hear, of course, about technicals and strategies, but also psychology and mindset tips that you can apply in the market on a daily basis. So without further ado, let's dive right into the interview with Greg Rubin. So just tell people a bit of background about yourself and who you are.
So my name's Greg Rubin. I'm a senior trader for Global Prime. I've been a trader since 2007. Started off on fixed income, moved over to the equity side briefly before I spent many years trading precious metals for a boutique firm in London. I was head of desk recently, March last year. I moved over to Sydney, and I'm now a senior trader for Global Prime. I trade various markets. Of course, metals I've traded for many years, and I'm sort of well known, got a reputation in the metal space. But I also enjoy trading indices, stock indices, various commodities, oil, natural gas, cryptos I've become very interested in since 2017. For me, I'm a technical trader. Specialize in Elliott Waves is my preferred method to analyze markets. So if you show me a nice chart, and I'll happily critique it for you.
I'm really curious about that. We have a lot to talk about for sure. So you work at Global Prime now, but I want to go back in time. We'll kind of discuss that in the future for sure. But let's begin with, how did you become trading? How did you come to trading in the first place? What was that first experience with you in trading?
So, to be honest with you, my story to becoming a trader is actually very straightforward. I went to university. I studied a finance degree, honors degree, which I did a major in statistics. And at university, I became really interested in poker. And it's actually uncanny, the similarities between poker and trading. You know when to put your chips in. You got to know when to fold, like you do when to close out a losing trade. You need to know how to read people, read in the market. So the similarities are very present. I was a very good poker player at university. So trading fascinated me. And I was fortunately enough, when I finished university in 2006, I managed to get a trading job in Cape Town. And the head office was in London. So I took the job on the premise, if I was any good, they would transfer me to the London office. And after 7 months, I was transferred to got my transfer to London, and I just haven't looked back since.
So was it easy for you to come into trading and to learn to trade right? Or did you have like a learning curve that you had to adapt to and some kind of failures a bit along the way?
So trading, it's a learning curve, and it's a long, hard learning curve, because trading is the sort of thing where it's 2 steps forward, 1 step back. You find something that works, then it doesn't work. For me, the biggest sort of breakthrough I had was in 2011 when gold was still surging. It was hit 1920 at the time, and everybody was euphoric, expecting prices to keep going higher. And I came across an Elliott Wave analyst who kept calling for the top in gold. And of course, gold topped out, and we saw a very big drop from there down to the 1160 level. It sort of fascinated how this guy could see it, or who could call it. And I sort of delved in and I started studying Elliott Wave myself. And that's when the world really opened up to me. I sort of saw markets in a different light, what actually moves markets as opposed to what we told, to what most retail are told, sort of learning. And that was the biggest jump for me, was in 2011. But I think it's important to understand that any system by itself is not going to make you a profitable trader. The big thing for me was, after seeing the markets in a different light, was understanding how important risk management is. In essence, you could have any system in the world. If you don't apply strict rules and have strict risk management, you're not going to make money in these markets. So that was when I really sort of became from a trader that was sort of breaking even or sort of having big fluctuations to a profitable trader. What was when I really became strict with my rules, and in essence, I eliminated the big losers from my trading.
Who taught you about risk management? Because for a lot of traders that I talk to, sometimes they hear about it by many people, but they don't want to apply it. They think, oh, it's from someone else. I don't need to do that. So who taught you risk management? How did you apply it to yourself?
Because it's not the fun part. Who wants to sit and read books or understand, For me, the best one, I mean, I've read so many books about it, but Mark Douglas, Trading in the Zone, is just a must read for all traders. I was one of those traders, if I'm honest with you, who had all the bad habits to start out with, which I had to correct. I would trade too big a size. I would have stops too long. I let my losers run too long. And listening to it, I actually listened to the audio book. It actually hurt. Every sort of point he was making resonated with me on what I was doing wrong, and why I wasn't becoming profitable. And just applying it, just understanding on at the end of the day, we are money managers. When you get into trading, you think a good trader is somebody who can call the market right, when in essence, that is not even a quarter, yourself, it's not even a quarter of the game. You need to understand that you've always got money on the line. You've always got to understand your risk, how much you're prepared to lose on the trade, how much, I look at all trades now from a risk perspective. The first thing I do is I look at where my stop loss has to go to, which would invalidate my thesis. And I'll trade my size according to my risk that I'm prepared to lose on the trade. So yeah, I think Mark Douglas is a must listen or must read for anybody who wants to actually understand the risk management side, trading psychology side to trading.
I totally agree with that for sure. What happened once you become a profitable trader? Was it easy from there, or was there some issues, pitfalls along the way?
One of the biggest issues that a lot of new traders will have is they have big egos. They don't want to lose money. When the market goes against them, they won't sell because they want to hold on. You've got to understand that there's no place for an ego in trading. You've got to accept that if the market's going to stop you out, you're going to have losing trades. You're not an idiot because the market stopped you out. That's part of the game. So was it easy? No. The point of what I was trying to say before was the fact that markets are dynamic. Markets are going to change. So just because you had a good run or you made money last year doesn't mean you're going to make money this year. So I've always had that attitude where put everything aside. I don't become euphoric when I win. I don't get down on myself when I have losing days. It's very important to understand that in the learning process. So I was fortunate that I had a system which worked. I developed my risk management rules. I don't have an ego, and I just keep applying the same methodology throughout, repeating my process step by step. And I've been fortunate that I've been profitable for many years by applying that. So no, it's not easy, but I put the work in. I'm up 4:35 every morning, speaking to my group. I'm analyzing the charts. By 6 o'clock in the morning, I'm already up to speed with what I'm looking at, what I'm trying to do, where I think the market's going. So it's not easy, but I've purposefully stay on top of things. I'm one of those crazy people that live, breathe markets. So I have no problem putting in the work and the effort because it's a strong passion of mine.
I've been using Elliott Wave since the beginning, which is something that came later in your trading. At some point we needed it.
So 2011 was when I started using Elliott Wave. Probably took me a year of studying it before I considered myself very competent in it. Obviously, the more you do, the more you realize you had a lot to learn as you go along. But yeah, since 2011, and for me, it's the best method to analyze market, just purely because it gives you that roadmap. It tells you invalidation levels and provides you with a big picture. So, and I must add, I do use Fibonacci. So I use my fibs. I combine that with Elliott Wave.
So I'm sure a lot of people are going to want to they're going to know like how you use these tools. Can you kind of share an overview of how you would use them in your trading? What that would look like?
So with Elliott Waves, essentially it's counting waves, and 5 waves in a certain direction signifies where the trend is. So if you come off a low, let's say the Corona low, and you see 5 clean waves up off the low, it's your first sign that the market is likely reversing. So you have 3 waves is a corrective structure. It tells you that the market is correcting, usually labeled as ABCs. They can become more complex or be triangles, but in essence, it tells you where the trend is, where the direction of the trend is. Now, I also apply fibs to it, and the Fibonacci levels are very important, and still to this day amazes me on how accurate they are, how often the market trends towards these fibs. And what I do is I know the Fibonacci relationship between the different waves. So I know at all times what wave we are in, and I know where to expect the market to go. But the most important thing is I have levels which tell me your thesis is wrong, get out. So it allows me to go, well, I know the market, as long as it holds above this level, I expect it to do X, Y, and Z. And that gives me a lot of conviction in my trade because I know where I'm wrong. I know how much money I'll lose when I'm wrong. I know it fits into my risk profile. And if I'm right, it's generally much a higher reward to the risk that I take. So as an elliptician, the most important wave for me, or the wave where the most money is made, is the third wave. And I wait for the first wave to complete, which is the 5 waves up. I wait for the 3-wave retrace to come into my support zone. And that's when I look to take the market. So I'm not knife catching. I'm not front running. I'm waiting for the market to tell me where the trend is, and then I'll buy the retrace of that trend.
Is this something you do on a higher time frame, or is that more like a day trading strategy?
It applies to all time frames. I'm a scalper and I'm a swing trader. I do both. If I see sort of nice shorter term charts and I see a market trending, I'm more than happy to day trade it. When I see markets, as I called out, and with the metals, when we were at the lows and starting the third wave, it's time to have a swing trade mentality. So I fluctuate depending where we are. When I'm in a third wave, I'm swing trading and I'll day trade around my core position, but I won't lose my core position. When a market is sort of ranging, then I'll tend to day trade more. So yeah, I keep 5-minute, 50-minute, hour chart and a 4-hour chart up at all times.
So you don't trade both at the same time. It would be like you focus on one based on circumstances.
So again, I think this is very important, is what I would say with the methodology that I use. It tells me where I am in the cycle. So if I'm in a 4th wave, I know I need to be day trading more. I know I need to take profits more quickly because I know they've diminished very quickly. The market, it's not easy conditions, 4th waves to trade. And that's why when you got the profits, you lock them in. I know when I'm in a 3rd wave is do not lose your core position. You can have a market, let's look at silver, for example, it can be trading at 26, it can drop to 25 overnight. By the time the day ends, it's back at 26 again in a 3rd wave. It's that sort of action. So you don't panic, you don't lose your core. And then, yeah, it totally depends what degree I'm in, if I'm trading C waves or if I'm trading corrective moves or counter trend moves, which I don't always suggest, but something I do from time to time. Then I'll be more in scalp mode. So again, it comes down to the framework that I use and that I teach in my group.
Would you say that metals, which is your main trading instrument, would that be something easy for people to go in? Or because people are more attracted to, like, let's say cryptos or Forex or stocks, but metals kind of are in the background. Would that be something that people can look into? Or it's different, it's like a different game?
Yeah, look, every market has its own individual characteristics. I love metals because they're such an emotional market. They take you to the extreme. You'll see markets will stop a few pennies above support and turn around, and just when you think it's about to invalidate. I love that emotional side of it, and I love the fact that they're trending. It's why I enjoy trading indices. I enjoy trading metals. I love trading cryptos. It's why personally on the FX side, where they range a lot more, I find metals are a lot more sort of trending more often than not, or more often than most markets, should I say. So I love that about them. But at the end of the day, my methodology, it's based around sentiment. The sentiment moves markets, and it can be applied to all markets.
So you mentioned waking up at 4:45 a.m. I'm curious to know, what does a day in your life look like as a trader? So you wake up, you look at your chart, then what else?
Yeah, so I wake up around 4:45, 5 o'clock latest, and I've actually got a Discord room. So I wake up, I say good morning to my members, and then I go and I analyze charts for about 45 minutes to an hour a day. I'll go through, see what I've missed or what's happened in the overnight session. and I'll get myself prepared for the day. I do a daily an update. So I update all my charts in my group, discuss the markets with them, and then I'll go about my day trading. And I usually leave the office around 6:30, 7 o'clock at night. I'll take a couple hours off and I'll check in just before I go to bed again. So it's sort of balancing the trading side and balancing providing my members with information. When markets are busy, I will stay up and I will trade the US session. That's been an adjustment for myself. Being based in London, it was very easy for trading. You got the European session, then the US session. Based in Sydney, I've got used to the trading conditions in Asia and trading the European session. So if markets are busy, I will stay up and trade through the night, the US session.
What would you say are some of the biggest habits that help you stay a good trader?
Biggest habits that make me stay a good trader? Mm-hmm. So discipline. I've found the older and more experience that I've got, the less frequent I actually trade. A lot of new traders think they have to trade every squiggle on the chart. Every time the market moves, they need to be in a position. So having that discipline to only trade good setups, let the market come to me. One of the biggest reasons people lose money in these markets is FOMO. They see a market moving, they have to get in and they jump in. And of course, the market sort of tops out and goes the other way. I don't chase markets. I let them come to me. And if I miss it, that's not a problem. I'll catch the next move. I don't need to be in every sort of move. Risk management is the big one. I have rules, the most amount I can lose per day, the most amount I can risk per trade, whether it's a day trade or a swing trade. Because I believe, and I've proven over time, I beat the market. I don't want to have one bad day that can wipe up my account. So I don't want to ever have a session or a day, a week, a month, a year that can destroy my account. And that's why my risk is very important. So traders, we all have bad runs from time to time. And it's important that you can see yourself get out of that without blowing up an account. And that's down to the risk management side of it. I've touched on earlier, I've got zero ego. I don't care if I get stopped out. For me, trading's a game of probabilities, and I'll put my bets down where the odds are in my favor. If I get stopped out, I don't take it personally. It's part of the game, just the way the markets are. So patience, trading the right setups. Like I said, you don't need to be involved in every trade. You just need to, you don't lose money by not being involved. So no problem missing out on trades, but making sure that I'd rather miss a trade than enter a trade for the sake of entering a trade.
Now, I'm curious to hear a little bit about Elliott Wave, because the fact that I know some people are not liking them that much. Some people like them a lot, probably you do. What are some of the kind of issues that can happen with the Elliott Wave, and why do you like it?
So the problem with Elliott Wave is it becomes subjective in a sense with people who don't know what they're doing. You can get people who don't actually know Elliott Wave, and they can put things on their chart, known as wave slappers, and they actually give us Elliotticians a bad name because they literally not even applying Elliott Wave. They're just putting numbers and letters in random places, and in essence, that's not analysis. So when you truly, there's a reason a lot of the top traders use Elliott Wave either as a primary tool or as a secondary tool. So when you truly understand it and how powerful it is, especially when combined with fibs, that it not only gives you the roadmap. You see, for me, Elliott Wave is not even about its predictive power. It's about the fact that it tells me where I am. I know exactly where I am in the cycle. And for me, there's no better method that can give you that sort of overall view. So I like the fact that with trading with it, it gives you your big invalidation levels. So you know at all times where the thesis is wrong. And you ask me why people don't like it. It's the fact that you get people who give us a bad name, who just don't know what they're doing, and they call themselves Elliotticians. But also people don't like the subjective side of it. They don't think, because you often have a primary count and an alternative count. So that tells you, I know the market is more than likely going to do this or that. And they can be pointing in the opposite direction sometimes. And people think, well, how can you say it's going up and going down? But what that says to me, I see it from a side of, well, if that level holds, it's going higher. If that level breaks, it's going there. So I know I can take a long and I can put my stop just below there, or I can take a short and put my stop just above the high. In some instances, if it is that murky or can be both ways. So I think people don't like the fact we have a primary and an out. More often than not, they do point in the same direction. I just gave an example there on sort of extreme levels. But for me, there's a reason a lot of the top traders use it. And that's because of the nature of, again, not only predictive tool, but also the fact that it tells you where you are in the big picture.
And where should people go if they want to learn about Elliott Wave? Are there some books they can read or that you recommend, or some websites perhaps, or some courses?
Yeah, so the Elliott Wave Principles by Precher, that's the Bible. It tells you all the rules. It tells you the guidelines. It gives you the theory. Now, what I teach is a method how to turn that theory into practice. The practical side on how to trade it, because it can be quite daunting. It's like learning a language. You got numbers and letters that sort of come everywhere. But when you understand the basics, after that, I actually do teach how to create a trading plan based on that, if that makes sense. There's one thing learning the theory, as you know, but there's another thing understanding on how to trade that. And like I said, I trade from a probability aspect. It's the same thing. I'll take good setups that will work over time. If I said to you, Ettiene, let's flip a coin. Every time it lands on tails, I'll give you $10. Every time it lands on heads, you'll give me $15. We can do that 5-6 times and I might lose. But if we do it 100, 200, 500 times, I'm going to make money in the end. And that's the way I trade. The fact is I'll take the same setups. I'll put my stops in the right place, my levels at the right time. And over time, I will make money trading these setups. It's a matter of keeping your discipline, eliminating the big losses, and making sure you stick to your rules and principles, because that's where a lot of traders go wrong. Is they say, well, just this one time, or I don't want to lose on this bet. I know it's going to go higher, so I'm going to remove my stop. And then you take those big losses. If you can eradicate those big losses from your trading, the difference will be incredible. But it's just that, what if it goes higher? What if it turns here? I don't want to get stopped here. That sort of mindset is something that needs to be totally removed from trading, in my opinion.
How much emphasis do you put on improving your trading and your style and your setup in the market and making it better?
Again, I have a system that has proven over time works, and I stick to it. Now, I understand markets are dynamic, markets change, but that doesn't change the setups I take. From a simplistic perspective, like I said to you, I like to trade third waves. I wait for the first wave to complete, and I buy the retrace at my support levels. That's the way I like to trade, whether it's a 5-minute time frame, 10-minute, 15-minute time frame, hour time frame, whatever time frame. That is my preferred method. Now, I'm aware that there'll be times where that would break down, or there'll be times where markets are not trending as often, and you need to adapt to that. That's the nature of the game. But again, Elliott Wave essentially, like I said, sentiment based, and it's very much based on, you put humans in the same position that end up doing the same thing every time. And that holds very true. And that is why I believe it works. It's based on that sort of sentiment that we speak of, and humans don't change. Yes, there are a few more black boxes, but they're still programmed by humans. But yeah, I'm a hard worker. I'm up in the mornings. I'm looking at my chart. I'm looking where I can be wrong. I'm looking where the thesis invalidates. I haven't stopped putting in the hard work. I don't rest on my laurels. I understand the market can humble me at some point, and that's why I keep going through my methodical process.
Hey, that's for sure a lot of repetition and going back and doing the same habits over and over again. But I think that's where success in trading lies also, is doing the same thing all the time and not wanting to change everything all the time.
Yeah, exactly that. You find a system that works and you repeat. That is what it is. But you got to find a system that's proven to work at all conditions, that can handle bad periods. Because as traders, we're not always going to win. We're not always going to be right. We're going to have good runs. We're going to have bad runs. But it's imperative with your risk management rules that when you go into a bad period, it's not going to endanger your account. And that's why the risk management is so important. And I think underutilized by many traders. I'm sure you found the same thing. People don't want to spend time doing it because they assume they know. A lot of it is basic. Yes, I know to be patient. I know to be disciplined. But when you're in the heat of the battle and you're in the trade or you're having a bad day and emotions are running high, you do stupid things. And that's why your biggest enemy as a trader, ironically enough, is yourself. And that's why you've got to understand that and prevent yourself from blowing up or prevent yourself from doing stupid things, because that is what actually damages your account. So I spend a lot of time protecting myself from myself.
That makes sense for sure. I'm curious if you have any specific goals with your trading in the next few years. Are there any things you want to work on or get better at, or do you just want to keep doing the same thing you do now?
Again, if it's not broke, I don't see a reason to fix it. My methodology, fortunately enough, works for me. If markets change, I'll have to adapt, but I'm very happy doing what I'm doing. What I have taken on in the last, for about 4 months now, I did start through the company that I work for, a mentor program to help new traders, to help traders get better, to become profitable. So I would like to grow that. That's a certain aim. I get a lot of joy out of traders learning and seeing the results. When I see traders start charting for themselves or start sending me these charts, what do you think? It gives me a joy, especially when they chart something and it works out the trade. So that's one of my goals, is to try to grow that. From a trading perspective, remain profitable, putting the hard yards in, and fingers crossed we're in for a good year this year. I think, if I'm honest with you, I think market conditions should be a lot easier this year. I'm expecting risk assets to have a very good year. I think S&P, along with other indices, are likely headed much higher this year. Same with metals. So I am expecting a more stable and easier conditions than we had last year.
Interesting. So I know for a fact that a lot of people have been talking about a crash of the S&P in 2021 or in the next few months. What makes you think that it's going to go higher? And I'm just curious to know your thoughts on this.
It's from my charting. I had a chart, and I know not many people will believe me, but I had a box on my chart for where way forward end in the S&P before Corona. Didn't know what Corona was. And the market literally stopped banging that box. And that's where people get confused or talk about the news. Now, I'm going to go, and probably quite controversial, and tell you, with all our Corona, I was expecting the market to go there. Corona was the catalyst that drove the market there. So in my humblest opinion, I think we're in the fifth wave in the stock market. I'm expecting at least 4,500 on S&P to be hit, may even extend as high as 6,000. And when we get this next move to complete, I believe it will be the end of the bull market. This is the final fifth of the fifth in the bull market. And from that next high, I am expecting sub 2,000 S&P. I think we're in that final leg higher now. I've got a minimum target of 4,500. So, and I expect 2021 for us to get towards that level, if not even exceed it.
Very interesting. And again, it's not about being right or wrong, because someone's going to be wrong for sure in that hypothesis, of course. But it's just interesting to know what you think about what you see and everything, that other people see different things. So that's just good to know.
What I see, as I said, from a wave perspective, we had wave one, hit the ideal target, so did wave two, so did wave three. We got the wave four on Corona. So I don't see why at this point I need to change my thesis when it's done exactly what was expected throughout the waves. Yeah. So again, I've got invalidation levels and tops can truncate. But what I'm seeing across the board is right now, just all-time high after all-time high that we're seeing. I have no reason to change my thesis. Again, that is a daily or monthly chart I'm talking about here. On an intraday, I could feasibly see the sort of 3,850, 3,9 level provide resistance and give us a buying opportunity on a pullback. I think we could see a nice pullback before we really do take off. Not to say the market will. It's been giving very shallow pullbacks the whole way. That's been why it's been so difficult if you never had a core position, to catch a core position, because the pullbacks have been so shallow ever since the Corona low in March. So whether we get a micro pullback or not on the larger time frames, I am expecting significantly higher prices this year.
And speaking of which, also might be following Bitcoin as well and cryptocurrencies. What would be your thoughts on that?
It's not unexpected, this move. I was looking for a price target of 60,000. Yes, I can be on board for 100,000. I can extend that high. So this is not unsuspected. Maybe how quickly the move's taken place. So where we're at in the cycle, we're currently around the 36,000 level. I saw just before the interview. As long as we remain above that 19,500, 20,000 level, I think there's a good chance we will get towards that 60,000 level. That is quite important to me. Is that support zone. Should we break that support zone, we could be in for another move down to 3,000 to 5,000 before we potentially go again. So, it's one of those things. Above that level, I think we could feasibly see up to 60,000, even higher. But I would not like to see that level broken before we get this next push higher. It's a very volatile market. It's not something...
Definitely, sure.
And it's not something that, it's not a prediction I would loosely just throw out there, something I'll trade. What I'm saying to you, it's something I would look more on a shorter term basis. But in essence, above those levels, I still think we got a few legs higher in this market before we pull back again.
Awesome. So where can people find you? Connect with you, reach out after the interview? Where can they reach out to connect?
So I've got a mentor room on Discord. I believe I shared the link with you. So there'll be a link after this interview where you're more than welcome to come see my work. What I do is I provide analysis. I share a lot of the trades that I'm doing. But I also spend a lot of time on the learning side. I do live videos, spend time on the trading psychology, the risk management side, which I think has been the common theme of this interview. I spend a lot of time on that, as well as I share methodology of the sort of live video of the methodology that I use. It's something that I've really enjoyed, that I've loved doing, is giving back, I guess, to the trading community, is the mentorship side. And it's very nice to see it grow. So that's where I am. I'm very active in the group. So if you share the link, that's where people can find me.
Yeah, we'll just put the link in the description of the video and in the podcast note as well, if people check it out and connect with you for sure. And I have this question I asked all my guests at the end of the interview, which is, if you could give people one piece of advice on how they can become better traders, what would that one piece of advice be? Don't
look for a holy grail. A lot of traders think there's a holy grail out there. They'll find an indicator and go, well, if I learn MACDs, I can make money. If I learn Elliott Wave, I can make money. If I learn RSIs, I'm going to be a profitable trader. There's no such thing as a holy grail in trading. There's no one indicator that will make you a top trader. So stop spending so much time looking for that. In essence, is spend more time understanding markets, what moves markets, and understanding it's a game of probabilities. We don't know where the market's going to go, and we don't need to always know where the market's going to go. So we will place our money down when the odds are in our favor, and it's that probability side aspect of trading that's important to understand. So one piece of advice is, don't look for that holy grail. Lose your ego. Don't come to the market with an ego, because the market will humble you very, very quickly. Do not trade every squiggle. Markets are always moving. You don't have to be involved. Be patient, disciplined, and wait for the market to come to you.
Awesome. That was back advice, and that makes a lot of sense for sure. Thank you, Greg. I appreciate your time, and I'll talk to you soon.
Thank you very much.